My guest today on StansberryInvestor.com says now more than ever, you need to be keeping the faith in gold. Joining me today is John Doody. He is the editor of one of the best gold newsletters out there, goldstockanalyst.com. John, always good having you on the show. Nice to see you again.
Great to see you again, Danny. Always a pleasure to be with you.
Yeah, pleasure to be with you as well, John. I like a quote from your most recent newsletter here from goldstockanalyst.com. If I had $1 for every person who told me that he or she missed it when gold was over 2,000 an ounce last year, I'd be a much richer man. And I like the word much. It's human nature to look backward and, basically see that you missed gains rather than look forward and see opportunities. I'm going to throw myself in that rink with you because I can't tell you how many people said, I missed it, Daniela. I missed the 2,000. It's over now.
Well, I don't think it was over. And I'm still on record as predicting $3,000 gold by the time this is all over. But that's a ways from now. And everything that's happening in the macro area, from spending to interest rate policies, all are good for gold. It takes a while sometimes for the market to realize that. But just the COVID programs that we had that began under Trump with the deficit spending of $2.2 trillion, and then the two Biden programs of $1.9 trillion, they add up to over $5 trillion in borrowings that are being used to support the economy to get through this pandemic. I'm not arguing against it. I'm just saying that they're a fact. And now Biden is in the press today for a $3 trillion program for infrastructure and climate and so forth. And where's that money going to come from? It'll be borrowed because the Republicans will never allow a tax increase.
So John, before we talk about where gold's going, and I want to talk about your $3,000 call, I want to talk about what happened to gold, okay? Because since those bright sunny days in August, it's been in a bear territory here. Why has it been kept down if the conditions are perfect for the metal?
Well, that's always a good question, and I think part of it is that the marginal investor, not the long-term investor in gold, but the marginal investor got attracted elsewhere by the bright lights of cryptocurrencies and GameStop and the Robin Hood phenomenon that might have been good for gold has been better for all of these very highly speculative stocks. But they either will get their hands burned by playing with fire, or they'll get burned out. And what's left is a basic gold investor who understands the macro economic policies behind it.
Well, as you've said, gold is a barren asset yielding a no income, and it's obviously competing with assets that do, like obviously stocks. So that's one thing. And then you talk about $3,000 gold down the line. And people might say, okay, that's great, John, but why would I be in gold when look at my returns in Bitcoin?
Well, look at your returns a couple of years ago when Bitcoin fell to 4,000. I'm an old guy, obviously. I don't quite understand how an accounting system, which is what Bitcoin is, it's really a record-keeping system of who owns what. I don't understand why that has the value that's given to it in the marketplace, particularly because there's so many other competitors out there that do the same thing. But I also don't understand Tesla. Tesla's done very well. It's a great stock in terms for people who owned it, but it doesn't have a monopoly on electric vehicles. And coming down the pike, I have to ask myself, would I rather have an EV built by Porsche or Tesla? And I think the answer is pretty straightforward. It's Porsche.
Well, the stock valuations, fueled by the Fed, and the question is how much longer can that go on for? Any guesses, John?
As the famous economist Herb Stein once said, these trends go on until they stop.
No, definitely a point made, John. And getting back to your $3,000 gold call, not necessarily this year, right? What's the time frame you're looking at for that?
No, I think it's as this economic cycle plays out, and when gold ran up to its last high of 850, it started in 1971 at $35, and it took the whole decade it was early 1980 when gold hit 850. So, it's a long-term play. It takes a while for macroeconomic policies to be felt. And then, of course, there was stagflation of the 70s and high interest rates and high rates of inflation, the misery index. Most people watching probably don't remember that, but I do.
So what I'm hearing from you, John, gold is still cheap. So gold miners even cheaper?
Yeah, they are. And that's unbelievable because last year the miners had a good year, the actual miners, and the average gold price was $1,770. They all made money. Some made more and are sharing more with their stockholders. But so far this year, even though it's down right now, the average price of gold, I just looked this up this morning, is over $1,800, about $1,803. So theoretically, the gold miners should be making more money than they did last year.
And I don't want to give away your picks, but there's you're impressed with what you're seeing so far from the companies this year?
Yeah, well, we're just getting first quarter results in now, and everybody's doing gangbusters. It's I don't know, maybe these will become the value line investor industrial stocks of the 2010 era or 2000 whatever in the future. But the companies are doing well. They're just they're out of favor. And
out of favor.
That's the time you want to buy, is when things are out of favor.
When you say out of favor, is that out of favor with institutional investors, Wall Street in general? Out of favor with whom?
Yeah, I think there's not much interest in gold stocks right now, because people get interested in gold stocks when the metal is doing something. Right. But right now it's languishing, so nobody's excited about it.
Well, hopefully that will turn around soon, John. It's always a pleasure speaking with you. I guess last thoughts here for investors watching. What are your words of wisdom here?
Gold is going higher, and this is a good place to get in. And if you think you missed it last year when it got over $2,000, here you go. Here's a chance all over again. Gold has a way of doing this, of giving you a second chance. I
hope to see you down in Florida soon, John. And I'll keep enjoying your newsletter in the meantime, goldstockanalyst.com. One of the best out there. Absolutely. Thank you. Okay. Thanks, Danny. Nice to see you. And thank you for watching this episode of StansberryInvestor.com. We will have much more for you, so be sure to stay tuned. In the meantime, remember to share us where you watch us. Thanks for watching. I'm Daniela Cambone.